AI has been gaining traction in the stock market for some time now. In the US, about 70% of comprehensive trading volume is initiated through algorithmic trading, and AI-driven investment advice platforms are becoming increasingly popular. But can AI really beat the stock market? The answer is complicated. On one hand, AI has already proven to be a powerful tool for analyzing data and making predictions. AI algorithms can process vast amounts of data quickly and accurately, allowing them to make more informed decisions than humans can on their own. This means that AI could potentially outperform human investors in predicting future stock prices and trends. AI bots are becoming increasingly popular in the world of stock trading. With their ability to analyze large amounts of data quickly and accurately, they can often make better decisions than humans when it comes to investing. In this video, we'll explore how AI bots can beat the stock market and make you rich. Firstly, let's talk about what an AI bot actually is. AI bots, also known as algorithms, are computer programs that can analyze large amounts of data and identify patterns. These bots are designed to learn and improve over time, allowing them to make more accurate predictions in the future. In the context of the stock market, AI bots can be used to analyze past market trends and make predictions on which stocks are likely to perform well. AI bots use algorithms to analyze vast amounts of data, including news stories, financial reports, and market trends. This allows them to identify patterns in the stock market that could indicate potential investments with high returns. They can also monitor changes in the stock market in real time, allowing them to take advantage of opportunities as soon as they arise. AI can help you beat the stock market by providing insights into trends and patterns that would otherwise be difficult or impossible to detect. By using machine learning algorithms, AI systems can identify patterns in large data sets that may indicate potential opportunities for investment. For example, an AI system might be able to identify stocks that are undervalued or overvalued based on their past performance or current market conditions. Additionally, AI systems can also provide valuable insights into macroeconomic trends such as inflation rates or GDP growth rates, which could give investors an edge when making decisions about where to invest their money. Now let's take a look at some examples of how AI bots have been successful in the stock market. One great example is the hedge fund Renaissance Technologies. This fund uses AI bots to analyze stock prices and make trades. In 2020, their flagship Medallion Fund had a return of over 70%. This means that if you had invested $10,000 in this fund, you would have made a profit of $7,000 in just 1 year. These types of returns are not uncommon for Renaissance Technologies, as they have had an average annual return of over 39% since 1988. Another example of AI bots beating the stock market is the AI-powered trading platform, Alpaca. Alpaca uses machine learning algorithms to analyze market trends and make trades in real time. In 2020, Alpaca's top-performing portfolio had a return of over 200%. This shows just how powerful AI bots can be when it comes to predicting the stock market. One example of an AI bot that has been successful at beating the stock market is Trade Ideas. This AI bot uses a variety of algorithms to identify stocks with high potential for growth and then makes trades accordingly. In 2020, Trade Ideas was able to generate a return on investment of over 20%. Another example is Signal Stack, which uses machine learning algorithms to identify stocks with strong fundamentals and low risk profiles. Signal Stack has achieved impressive returns since its launch in 2019, outperforming both human traders and other AI bots in the market. Finally, Tickeron is another AI bot that has been successful at beating the stock market. It uses predictive analytics to identify stocks with high potential for growth and then makes trades accordingly. In 2020 alone, Tickeron generated a return on investment of over 30%. These examples show that AI bots can be incredibly successful at beating the stock market and making you rich if used correctly. However, it's important to remember that no investment strategy is guaranteed to be successful every time, so it's important to do your research before investing any money into an AI bot or any other kind of trading strategy. On the other hand, there are still many unknowns when it comes to using AI in the stock market. For example, AI algorithms rely on historical data to make predictions, which may not always be accurate or applicable to current conditions. Additionally, AI algorithms may not be able to account for unexpected events or changes in the market that could affect their predictions. Investing in AI is becoming increasingly popular as more people realize its potential for helping them make better investment decisions. With its ability to analyze vast amounts of data quickly and accurately, AI provides investors with valuable insights into trends and patterns that would otherwise be difficult or impossible to detect. Additionally, since most AI systems are automated, they don't require constant monitoring like traditional investments do, meaning you can spend less time worrying about your investments and more time enjoying life. Over the past decade, artificial intelligence has become increasingly popular as a tool to predict stock market trends and behaviors. In recent years, AI has made headlines for its ability to beat the stock market. In April 2023, a professor claimed that an AI chatbot called ChatGPT could correctly predict the movement of stock prices by instantly analyzing news headlines. Investors were eager to assess the potential of this new technology and raced to see if it could outperform traditional methods. In January 2023, a stock image company called Shutterstock was quietly outperforming the market with its embrace of AI-generated images. The company's stock price rose significantly over the course of that month due to its use of AI technology. AI is also being used in other ways to beat the stock market. For example, an AI score ranging from 1 to 10 is being used to indicate a stock's probability of beating the market over the next 30 to 90 trading sessions. Though there have been some successes with using AI in the stock market, many financial engineers still believe that it is impossible for a machine left on its own devices to beat the market consistently. As such, investors should always be cautious when investing in stocks based on predictions from AI tools, and should always do their own research before making any decisions about their investments. Overall, artificial intelligence is proving itself as a powerful tool for predicting and understanding stock market trends and behaviors, though there are still some skeptics who doubt its ability to consistently beat the market. It has already shown itself capable of doing so in certain areas, and it will likely continue to do so in future years as well. Ultimately, it's impossible to know whether or not AI will ever truly beat the stock market. However, it's clear that AI is already having an impact on how people invest and trade stocks, and its potential should not be underestimated. As technology continues to evolve and become more sophisticated, so too will our understanding of how best to use it in the stock market.